Hey everyone, so you already heard the news that the Feds cut the rate by 0.5%, right? And so what does that mean for mortgage rates right now? Nothing different, nothing much. So we anticipated a 0.25% cut with a possibility of a 0.5% cut. And, you know, the odds were not in our favor for a 0.5% cut for the last week up until this point. So what does that mean? Now, we got the 0.5% cut, but remember that banks had already accounted for the cut ahead of time in order to capitalize on business and obtain, retain those loans immediately, refinances. So with the extra 0.25%, we may see pricing improvement, but as at this moment, we've only seen one bank reprice, and it's been about an hour since the Feds announced the rate cut, and we haven't seen any change in activity in the market thus far. But that extra 0.25% may translate to improvement tomorrow for sure. But moving forward, this is positive for credit card rates immediately. But as far as mortgage rates, like I mentioned before, when rates were being hiked up, and if you look at our previous post, we said, don't worry, the rates have already been accounted for. They're already built in. And so the day when the Feds raised the rates back then, there was no activity, no change. There were no midday reprices for the worse. And so the same is holding true right now. There's no midday reprices for the better, because as we mentioned, banks have already built that into their pricing engines and their rate sheets. But hopefully with that extra quarter that we got for a total of a 0.5% rate cut, we're going to see that translate either later on today as the market stabilizes due to the positive news, or in the coming days to come. Okay? Have a great rest of your day, and thank you for tuning in.